You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
And Dan, kicking off our conversation as we always do with the grain market, what are futures looking like?
Well, for corn and for wheat, they look about like they have been the last several weeks. I know corn growers that have either harvested the crop or just about ready to close things out are probably anxious or hopeful of seeing higher prices than we have been seeing. Corn closed yesterday, actually 4 cents higher at D's corn at 474 3/4. Interesting when you look a year out, that D's contract's up to 515 and 3/4. So again, the market right now, if you ask it, where are we at right now? Where's it next year? Well, not quite as overburdening a set of supplies as we've got right now. And when you look at a situation like this where we're kind of bouncing sideways at low levels, you start paying attention to charts. You know, what's the resistance? Where might we? What do we need to watch for if we were to go lower? You had the D's contract within the last week and a half had set a low at about 460. Again, closed at 474 and 3/4, about 475 yesterday. So, so that at least until further notice, we're kind of in that mode. We're watching 460, 450, something like that for lows. I'm sure farmers that aren't driven by cash flow needs are probably holding grain right now, and if anything, that's probably holding up this price. Of course, we're on the calendar for corn. We've got tax management before December 31st, and what happens right afterwards. So that's experienced farmers that are storing grain would like to delay income till the next year. I'm sure they're aware of that they're not the only ones doing that, and that could affect the cash market after the first. So we're into those modes right now. So we got that happening for corn. Wheat doing just about the same thing. Of course, the wheat harvest was way back in the middle of the year in July, late June, July, and the prices yesterday, 627 1/4, basically closed right down to the historic low for the D's 23 contract. Also closed at 627 and 1/4. It's a long story that we've been talking about with regard to why it's trading there, but the point is that if people still have unsold wheat, and they've held it to this point, unless they have cash flow needs or some tax management issues, they're probably holding for a bit now. Some of that wheat in past years, farmers that sell their wheat, grain elevators, co-ops, et cetera, would buy that wheat and put it into storage for the long term. And that may be what's going on. We'll have to look at the next stocks reports that come out to see what the percentage, if those percentages of on-farm versus off-farm are changing any. But right now, again, wheat's come down to these levels, bouncing right at the bottom. If we do go lower, then we're breaking new territory, and all that much more to think about, worry about. Although I'd come back and just reiterate that if people are still holding wheat now, they're probably they're not going to be probably driven by cash flow needs. They're into longer term storage, and so they're going to probably weather this. That'd be my thought. Then for soybeans, soybeans closed yesterday. The January contract, and we're in the November 23 contract's gone off the board. Now the lead contract's January, so that's what elevators are pricing off of. That's what our basis is figured off of. Closed at 1360.5, and that all that's happening in soybeans really brings us into all the weather uncertainty issues going on in Brazil. Again, it has been too dry in the central and north, too wet in the south, pretty wet in Argentina, but that's caused replanting issues. Again, the ag market press is sort of all over that, talking about the percent replanted and what that will do to the crop. So so here yesterday we had that January contract closed down 24.75 cents, almost 25. And as you and I were talking before we came on there, that's a sizable change. But really, when you're at such lofty price levels like 13.60, 13.70 thereabouts, it's as a percentage change, it's almost just the static. But it does seem like that the forecast for rainfall to come into those areas that the market's watching is looking for rains to come in pretty steadily after Sunday and on. Well, so the market's selling the rumor. We'll see what the fact is. So if anybody holding soybeans and is looking for signals of when to take action, it's good for them to be watchful of what's coming in now, heading into this weekend and on into that Thanksgiving week. So we shall see if the rainfall doesn't come to the degree that that's stated, then that's going to be interpreted pretty optimistically, pretty bullishly in terms of prices. So we'll watch and see. So I guess you stand back and look at it, and if there's anything happening right now in the market, it has to do with weather in South America, and that weather, we talked about soybean market, it would have the potential to impact corn market eventually for the second crop of corn, and some of that's already being planted. So we'll see how the longer term works itself out. But if I guess we stand back and look, it's only November. It's about Thanksgiving. We're already wondering about weather markets in South America. So that's a big thing. We have had would want to add here a little bit. We've had the ongoing soybean export movement. Latest week showed about 73 million bushels shipped. That's over the USDA's pace of about 30 million on average each week to get through. But of course, we've got kind of a limited either 4 to 6 month time window when the U.S. has this business before the next South American crop comes in. So you got that going on, and have had support in the markets in the soybean market from soybean meal market positivity, and soybean oil usage in the U.S. Again, renewable fuels, renewable diesel, biodiesel, both coming into play. They're not exactly the same thing, and in terms of the processes that they're used on. So you've got crush coming on pretty well, et cetera. So positive things going on in the soybean market, which eventually could affect the corn market, but and wheat just sort of again affected by a whole host of international, financial, and geopolitical challenges that are hurting us right now in the wheat market.
So as we're looking at kind of our time now in the current situation, you and I also were talking beforehand how our perception is that harvest is almost done, but it's really not done in some places.
Yeah, surprising. For corn harvest in Kansas, it shows that we're 94% done. So it means about somewhere in Kansas, still 5% of the corn out there. Well, that's probably on some non-irrigated fields with again people that are still working their way through harvest. So about 6% unharvested. Pardon me. For grain sorghum, about 10% unharvested. And again, sorghum, it is a crop that well known for being slow to dry down in some situations. So we're actually ahead of the pace at 90% harvested. Normally we're at about 82%. So dry weather has helped us move along pretty quickly, but still it looks like about 10% of that crop still out. Soybeans, coming from a farm background, normally you think, gosh, the soybeans you get them out quick before factors come in and cause them to deteriorate in the field and drop and all. But latest numbers as of November the 12th, 92% harvested, normally about 86%. But again, a combination of drier weather, and you can get into them quicker, et cetera. But again, we got about 8% of soybeans across the state in different places that aren't out yet, according to that rating. I would also say for cotton, again, cotton's a little slower moving. Well, the seasons work out that we harvest that later. Kansas, normally at this date, we'd be about 38% done harvesting of with cotton, but we're at again November 12th numbers about 57%, and probably a little bit more than that now. It's been dry, not a lot of moisture, but still a ways to go on the cotton side, and so we'll see where all that goes. And in looking at where wheat stands right now, and that's a big issue, and that could be a big issue in the wheat market again if the Kansas wheat crop, pardon me, has major problems. But in terms of percent emerged, we're at as of November the 12th, Kansas hard red winter wheat about 86% emerged, normally about 81, so about 5% ahead of normal. But the condition still struggles. We're rated, latest ratings are about 15% very poor, 18% poor, 36% fair. So we've have emergence. It'd be nice to have moisture to get really good growth going, but the lack of moisture and the weather that we have has just put us in a kind of a risky situation in terms of the development of the wheat crop.
And Dan, rounding out our conversation, talking about the crop production report, which we touched on a little bit last week. However, now the market's had a little bit more time to digest it now.
Yes, and as have we. In last week was really concerned about ending stocks and what the crop production size for corn especially and for soybeans brought about. And when you stand back and look at the numbers more, if I had a question, I think a lot of ag producers that were a little bit surprised by the increase in yields for corn and soybeans that came about. They were thinking, gosh, in the last part of the summer, hot temperatures probably really affected the size of the crop. You do look at what happened though, and in that November report, you did see an increase, let's say in Missouri, of about 4.3 bushels from the October to the November report, and that was quote ground zero in terms of where we thought the heat was affecting things, up to 147 bushels per acre for corn. Illinois went up 1.5 bushels per acre. Iowa up half a bushel. Iowa 200 bushels per acre. Illinois 203. Kansas went down about well, excuse me, these are in terms of percents, about 0.8%. Nebraska down about 0.6%, unchanged in Oklahoma and Texas. So the fall off that we thought was that we were going to see happening because of that hot, dry weather apparently did not materialize to the degree anybody that people were thinking it was going to happen. And for soybeans, you saw again, if you would have asked my own opinion, I would have thought that the hot, dry weather would really affected yields in the latter part of the year in Iowa. Really, no change from 58 bushels from October to November. Missouri, 45 bushels, 26 bushels in Kansas. That's for the soybean yield. Illinois, Indiana, both 61. Minnesota, 48. So that was the surprise, I guess, and that some of the stress that we thought was there that was going to hit those crops, at least if there's an impact, not showing up yet. Of course, there's still at least two more time frames when if there was a problem, it could show, and there'll be the January report somewhere around the 10th to 12th, 9th, 10th, 12th or something. That's the final set of numbers. And then the USDA has this habit of taking the numbers that they have in the January report and then January 2024, and then going all the way through, for the most part, through the September stocks report. And if the numbers don't add out, then they've had a habit of a pattern of making adjustments 50, 80 million bushels. So if that happens, then I guess so be it. But if it does turn out that those crops are lessened that far out, then here we're trading and working off of numbers that are in, that may end up and have needed adjustment. So I'm not saying that will happen. I don't want to begrudge our USDA NASS brethren in that, they have a tough job, but that's been the pattern of late, that we start out early in the year, we make marginal adjustments to what our earlier projections were, and then we just have to wait and see how the stocks numbers, supply demand works out to really see where we finally have ended up at, to really prove the truth of our yield projections and crop production projections in the U.S. And sometimes that doesn't happen until about 9 to 12 months later.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more.